Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Checking in on the market, SPY remains in a daily bull flag. So we had a bear break today, which was on the back of a headline reaction by algos. We look at that in just a second. But the consolidation remains healthy, and it was the second day in a row. It was the financial sector holding the pieces together, staying strong, breaking resistance at the end of the day, and keeping the S&P 500 very strong as well. Little gap filled on SPY at 306.19. We know anything above 301.73 is a daily high or low. We're not even close to that level. The bulls are hoping for a bull flag and looking for a new all-time high in the short term. So we had a reaction to a headline, and I should have pulled up the headline before recording the video, but we're already in the thick of it here. And essentially the headline, this is algos and bots reacting to a headline initially bullish because it said President Trump and China to agree on trade deal, and then later in the headline it said something like postponed or pushed back to December, and that led to the dump. So, bullish reaction, trade deal with China and Trump, and then, nope, it's pushed back, and that's the pullback. And then we had a 5-minute equilibrium. The 5-minute equilibrium broke bearish by a couple pennies with no follow-through, straight into a big bull break. So that was an example of a break with no follow-through, leading to the other direction, and only broke by a couple pennies, literally 2-3 pennies. And we're watching the hourly downtrend, because when the hourly trend changes, that's the indication that our daily high or low has been established. Anything under 307.50 is just an hourly lower high, and the bulls will have to hold the low of today, break the hourly lower highs, and then be looking back at the all-time high of 308 on the dot. IWM pulling back, looking for a daily higher low to form after the bearish reversal candlestick yesterday. Anything above 154.24 is a daily higher low. Just like SPY, we are looking for an hourly trend change to tell us the daily higher low has been set. QQQ, daily consolidation, potential bull flag. Anything above 195.29 is a daily higher low, and the bulls are going to be looking for the hourly trend change to look for convincing follow through. Anything under 254 is an hourly lower high. And again, we'll have to, if we reject from that tomorrow morning, we have to hold the low of today, see continuation, and that would be the bull flag scenario with the hourly trend change back to the bulls. Here's the shining star of the bulls, and we only broke resistance by 1 penny at the end of the day, so the bulls want a bit more follow through, but we were watching this hourly equilibrium where we had a high, low, lower high, higher low by a penny, double top, held support. There's our bear reaction to the headline. Bulls bought that dip, and a bull break into the end of the day. We want to see a break of 29.65 tomorrow if it's going to be convincing. Anything above 29.45 is an hourly higher low. And XLF has had its hourly uptrend intact since 28.47. No fake outs, no nothing. And it was the same thing all day today. I looked down at XLF, and every time I did, I said, nope, SPY bears aren't going anywhere. XLF looks just fine. So we're now looking at resistance after 29.63, highest price we've seen in over a year and a half. 29.77 is the next level. And again, when we pull back, bulls have tons of space for a daily higher low to form. XLV trying to form a daily higher low. The healthcare sector started its consolidation pretty much before everybody else. It's currently a little daily inside bar, and if the inside bar breaks bullish tomorrow over 94.41, the daily higher low will be set at 93.70, and the bulls will set their sights back on the recent high of 95.67. There was some decent bear volume in there, so we do need to be cautious if the bulls are unable to make their way back to the high. If we fail to do so and then roll over, weekly consolidation will be underway. And again, it's the kind of scenario where every name that we just looked at, weekly consolidation is expected. Now, that doesn't mean I'm going to be betting on weekly consolidation. It just means that if and when we see weekly consolidation anytime in the next few weeks, we will say, that's healthy, that's normal, we were extended, we're up 5-6 weeks in a row, and we're just looking for weekly higher lows to form. So expect that weekly consolidation. and it will require loss of the daily uptrend to see it, but it is something we're keeping an eye on. And I'm also liking XBI setup. So XBI is hourly oversold heading into daily support. Our daily support is 80.68. So we've got our 80.68 support to be watching tomorrow. If that holds, let's look at it on the 4-hour time frame. If 80.68 can hold, I'm going to be watching for the potential of a bearish entry for this head and shoulders pattern. Let's say we bounce off of 81. There's our higher low. We bounce and can't break 84.55. Let's say we reject from 83. I'll be looking for a potential scaling into a top fishing play off of 84.55, looking for a head and shoulders pattern to lose the 4-hour uptrend, which would lose the daily uptrend, which means zoom out and look for healthy weekly consolidation. Declining bull volume on the way up. One of our members pointed out today the bearish divergence where we are keeping the daily uptrend, but we are breaking the higher low pattern on the RSI. I don't generally use that as an indication for entering trades, but it's just a little side note. So let's see if we can hold that support. Potential play for the bulls off of 80.68 support tomorrow, but I'll be also watching the other side of the trade, looking for that lower high to form. The VIX still in our 4-hour falling wedge. I did adjust this downtrend resistance line to use the wicks here because it was starting to chop some of these candlesticks if we use the real bodies. Obviously, we saw no bull follow through, but I'm watching two things, not only this falling wedge, but the 4-hour equilibrium, where we have our low, high of the bull move, held support, lower high is set, and we're looking to see can the bulls form a higher low compared to 1230. So 1230 and 1220 are levels we bounced off of. Otherwise, falling wedge pattern still has my attention. Gold, nice bounce follow through. Weak bounce follow through yesterday, but we kept it going with little higher lows and higher highs today. We are still looking for a 4-hour lower high to form, so keep that in mind. Daily inside bar today, if it breaks bullish, it's yet another bounce and hold of 1480, which makes 3 times in the last 3 weeks. But we will still be looking for a lower high compared to 1516 on any bounce attempt. Silver already dropped to a more clear lower low. Same thing, if we break the high of today, 1763, we will just be looking for a daily lower high compared to 1821. So bear miners are keeping an eye out for their entry because NUGT got some nice follow through today. But again, we're just looking for a daily lower high compared to 3167. So if we're looking at that on the opposite side, let's see if dust can form a higher low compared to 677. That's something to be keeping an eye on and expecting these tightening ranges to play out into next week. Oil, bearish reaction to the inventory report, looking like a temporary top is set. Anything above 53.70 is a daily higher low, keeping those bulls in control. So space to consolidate and keep the uptrend. Knowing that we are expecting a weekly lower high, that's another reason we're watching and not going to be surprised by weekly consolidation in the markets. Oil's looking for a long, drawn-out equilibrium, but we have to lose the daily uptrend to say that our weekly lower high has been set. Natural gas holding on just fine. Daily inside bar. Inventory report is tomorrow. 4-hour has lost the uptrend. Technically speaking, it's a little lower high and lower low, but so far the bears don't have any follow through. So a lower high and lower low with no follow through means keep an eye out for the bulls to stay in control. I personally won't be making any bets on the inventory report, but the bulls are comfortable in the sense that even if we see a bearish reaction and pull back 10%, we will still be looking for a daily higher low. And actually 10% would put us at that level. So anything less than a 10% bearish reaction, daily higher low will be expected. So that's where we stand overall. I have not liked the trading opportunity in the last few days. I am a day trader, and I posted this in the chat room where if you look at the range, so the range of trading days right here, and we're looking at days that have a range of 298 to 293, $5.50 range. Even the smaller days within this time period, the range was, $3.50 on these smaller ranges. And we're looking at today's action. In the past couple days, the last 3 days, I haven't had any ideal opportunities. I have done some day trading. NUGT for a tiny win. Tesla today for a little day maker after a couple small trades. But the bottom line is the range here is just over $1. So and that's even a smaller percentage because the price is higher than when we were back there. So my point is, let's say I'm trading $100,000 and I'm looking for a 0.5% move to be looking for a $500 a day payout. As a day trader, that's my goal. Let's just say this is a hypothetical situation. If that's the case, if I have this much range, let's say I have a 2 to 3% range on the day to try and get my 0.5% move, or if I have a 0.8% range in the day to get my 0.5% move, it's going to be much easier to make my money in a volatile environment. So as a day trader, I can recognize this is a low volatility environment. It is not ideal. Pump the brakes, trade less, trade with smaller positions, be happier with smaller gains, and patiently wait for the next high volatility opportunity. And this goes into the point where if I'm a day trader and I'm paying my bills, I keep talking about how having secondary income is so powerful as a trader for psychological well-being and lack of stress. Because if I'm thinking about the electric bill and my rent and my mortgage and my cell phone bill and all that stuff as I'm trying to, oh man, I didn't get my $500 today. I didn't get it. I'm behind now on the month. It's forcing you to make trades in an unfavorable environment. So if you do not have that pressure and you have the luxury of time on your side, just sitting on your hands and saying, nope, today's not a great day for day trading. Let's see what we get tomorrow is perfectly fine. And having that mindset will prevent from giving back profits from when trading is easy and giving back profits when trading is more difficult. Have a good day. Do good things. Not sure if I'll have weekend videos. No end of the video here today. Heading to a music festival tomorrow and not sure how the service will be, so I will try to make some videos for over the weekend, but that will remain to be seen. Either way, worst case scenario, I will see you all on Monday, and I'm sure Jason will put out some weekend videos if I am absent. Thanks for tuning in. Until next time.